Back. I am back. It's been a bit since I've been back on the happy hour / sad hour now, guys. It is the DePIN Sad Hour. My goodness, what a week, guys. What a week. How are we feeling? How sad / happy are we feeling, guys?
Brian and I can't show our face right now.
It's
That's how
No
we
crying
feel.
too much.
yeah. Anyway, there's not much to be. It's it's so bad. There's not even words to describe it at this point. Like when I'm more focused on what the market's doing rather than deploying and like finding great projects to support and all that. That's pretty scary place to be in for me because I'm not like Brad. I don't sit here and look at stock charts every day and all that. I want to go out and like drop hardware. Like that's my shtick, right? Um,
Are you saying
I like.
Brad doesn't deploy? Is that what you're saying?
Brad deploys
I
all the
did not.
time.
I did not say that.
Ask his
I
ask his
just.
girlfriends. He deploys all the time.
I don't
Ouch.
deploy at the
You're,
pace I
you're
used
implying.
to, because like I'll tell you what, building out a IoT network, 80 rooftop installs and 100 drivers in my high mapper fleet and 180 drivers in my demo fleet, that was a grind. so
Yeah.
so yeah, and you know what? To be frank, the bear market is the time to deploy, but if I had looking at some of those fleets that I built out, great experience in building out a business. I got a lot of connections out of it. It was fantastic in a lot of ways. But had I put that money into freaking tokens, the token itself in the bear market, I would have come out even further ahead
Yeah.
without all the headache.
Wow.
So once you build out some deployment businesses, if you can get enough capital out of those, you can kind of work a little bit smarter and not harder over time. So
Sorry, just the comment right here. Sorry. It just said
what do you say?
Like Super Scotty said, I'm poor.
Uh-huh.
I feel that, dude. I feel that. But no, you're spot on, Brad. You're spot
Yeah.
on. I think now is the time to definitely be. I said it on a space today. I mean, I think now's the time to be, really looking into those plays that you like that you're going to double down on, deploy more hardware out there. Try to get ready for the coming eventual rise. We keep talking about the eventual bull market, and I keep hoping it's the week after we posted the happy hour, the week we went live, but it just gets worse and worse. So. Maybe I should just get bearish finally. Maybe I should say it's over and then it'll pump the next week. I don't know. I don't know how that works.
Guys, like this is the sentiment of it's all over and all this, it's we've seen this before. We saw this after FTX, like everyone thought it was over, except this time's different. Like I was talking to Tyler about this, like the institutional inroads are there. Like the industry's not going away.
Yeah.
At this point, so in that sentiment, I think it's like better than what we had before because we didn't know for sure if it was going to come back. That said, like this was 9 times worse on October 10th than anything we've ever seen in crypto. And like before that, things were trending in the right direction. We had Bitcoin at an all-time high just 4 days before that. We had Solana, sitting at $250. That incident that took place, it was a black swan event. I know people are like victory lapping the 4-year market cycle, whatever. It's like no one knew that was fucking coming. Like yeah. October 10th, no one knew that was coming to that extent. It's going to be a while before liquidity is restored. Like, so I think some big market makers, including Wintermute, got blown up in a big way. I think a lot of forced selling is still taking place, and it's going to be a minute, man. But I think eventually things will levelize, will come back. I think 2026, there's a lot of liquidity that's going to be flowing into markets. And I think that, DePIN is the silver lining. We talked about this on a space earlier this week, William, is like, I think we can drown out some of the noise. You'll see a lot of like the bad actors and a lot of the bullshit projects are going to get wiped out and have already started to get wiped out. And I think that this real projects will shine through, but you've got to look at which ones have the runway. Like not all of them have the runway to be able to weather a storm. Like it's been a tough year as it is. This was kind of unforeseen and it just added insult to injury, man. But, I do believe a lot of the projects we're talking about are going to rebound in a big way. It's just no one has a crystal ball,
Well, and I think to your point, Brad, the one thing that I keep trying to be optimistic with is that I think if this was like any other cycle, 1010 would have sent Bitcoin down to like 40,000, not whatever it did, 105 or 102 at the low, and then obviously down to now. But the only reason it's still holding there, in my opinion, is because there is the institutional validation that has been able to support the price action to some extent. But without having that, like in any other cycle, we'd be back to, the high, or maybe the kind of the low of the last cycle, or the high, whatever you want to call it. And because that hasn't really materialized, the only justification I can see is we actually have something that hasn't ever existed, which is institutional validation to keep it where it's at.
Yeah, without that bid there, yeah, we definitely would be lower. I agree, Tyler.
For sure. I mean, think about all the FUD that's been going around, right? We have the reverse carry trade tomorrow. That's been that's been hitting markets for the last month now. You had the government shutdown and the liquidity issues there. We had October 10th, the largest liquidation event ever. We had like rumors of the war with Venezuela. We have the MicroStrategy FUD that's going on left and right. The Solana Solana lawsuit hanging out there. It's like, dude,
the pump funds lawsuit you're talking about, right?
Yeah, it just got kind of rematerialized or greenlit by one of the judges.
Yeah, one of their devs just got sentenced to 6 years in prison. It looks like
that. I think he stole like $2 million from Pump Fund.
Yeah, he stole $2 million from Pump Fund, and now he just got sentenced to 6 years in prison.
Yeah, but that's different than the systemic lawsuit that's going on with saying that they basically colluded with all the components of the Solana ecosystem to kill
insider trading. What?
Yeah.
There's no insider trading.
No, that's a lie. That's obviously a lie.
I think that was the joke.
That was the joke.
It's obviously, I mean, that's the. I mean, I'm saying it's a lie that there is insider trading. There is a lie. There is.
So you're carrying the joke forward longer, I see.
Yes.
So
I am the joke, Brad.
It's gonna be huge.
So the fact that we're sitting at like 84, 85, though, like Tyler said, this would have been unthinkable like a few years ago with everything happening right now. Yeah, we would have been down below. Definitely below 70, maybe lower, honestly.
Honest to God, I think it would have been back down to like 40K because a lot of these major drawdowns are like 70%. So if you go down from 120 or whatever it was, like I think that would have been the area of resistance had it not been for the massive amount of capital flying into the market. Even though it doesn't look great at a last 3 months standpoint, I think it's the only justification.
Yeah.
And I would argue retail hasn't. I mean, retail is here kind of in 2024. We saw it with some of the meme coin shit. Unfortunately, that pulled a lot of liquidity away from real projects. And you saw Pump Fund took a lot of liquidity, and then we had Trump coin and Melania and the Argentina coin, and that wrecked all that was left of retail pretty much. So it's been all institutionally driven this year for sure. That's why you see the coins that have institutional exposure, whether it be Bitcoin, Ethereum had its run because of the stablecoin bill. Anything that had a spot ETF. Solana started to run because of the digital asset treasuries, right? People were front running the spot ETFs, which then got delayed because of the government shutdown. But then obviously October 10th happened. So yeah, I think the real question is like when is liquidity going to be restored, and when can we expect retail to start entering in again? And I think the answer to that has to do with the liquidity from the Fed and what happens in 2026.
It's the business cycle on that front.
The business cycle, 100%.
I haven't seen a report on this, and I don't really have the bandwidth to add another research report to my plate. But one of the things that I think would be really interesting to look at, to your point, Brad, I know we kind of talked about this yesterday, but like in historic cycles, there's only the singular euphoria between
breaking up.
Yeah, you talk about euphoria.
Bitcoin, and this is the first time. This is the first time where we've not seen correlation between the kind of the alt market, Bitcoin market. And so I think as a result, like the conclusion that I've drawn is that retail liquidity is dead because of 1010 and other things. And then the institutional market's holding up some of the top tier Bitcoin and then alts like Ethereum. And so as a result
the
of
top
that,
10
I think
alts.
it'd be interesting to see. It'd be interesting to see. Well, not even the top 10, mostly just Ethereum. But it'd be interesting to see what the kind of like that correlation between the liquidity driven for retail and kind of how that translates to the alt market and this bifurcation we're seeing with the institutional adopted coins.
Agreed. I totally agree. It's just, it's funny. It's such an emotional space. And if you're on crypto Twitter, especially, it's very emotional. Everyone, is even the people that were the biggest bulls, I think the last of them are being extinguished,
exiting or becoming bearish.
Yeah. And like, but a year ago, and it wasn't that long ago, I remember seeing posts from people saying we would never have another bear market. It wasn't that long ago on this happy hour where, a couple people are saying we'd never drop below 100K again.
Oh my God.
Who said something like that? Call them out.
I don't remember who it was. It was like a couple people on the happy hour were like, we're never going below 100K again. That was like a month, like 2 months ago, probably. So like, it's the emotion changes so quickly, man. And we can see things flip, but it's right now, it's been rough. I've never seen extreme fear for such a long period of time that I can remember. I don't remember it being this extended during FTX. Granted, I wasn't spending as much time in the space. I think I just was like, I'm going to go touch grass and take some time away. But yeah, things will turn around. It's just a matter of how
maybe it's been so dragged out because I obviously there's a multitude of reasons and we've talked about it, but I'm just thinking more like kind of not metaphorically, but there's a right word somewhere that I'm not using. Anyways, we had this like crazy pump or just reaching all-time highs with Bitcoin like over and over and over again, despite like the S&P not climbing necessarily the same way, despite like the non-correlation there between crypto and TradFi. And then all of a sudden you have the S&P hitting all-time highs like towards the end of the year this year over and over again as Bitcoin was declining. And so you had that massive divergence happening there as well. And so I think there might be some answers hidden in there as opposed like for the explanation as to why this is like being dragged on so long. I can't think of any at the moment, but I point to that in a sense of like it's just peculiar to me. It's very peculiar that's happened.
I think it's October 10th, man. Bitcoin is at an all-time high on October 6th, right? So it wasn't that long ago. It seems like forever ago.
Yeah.
But that's the event that really crushed it all. I mean, S&P, Russell 2000, gold, basically everything except for crypto has been hitting new all-time highs. But
and that's the other thing too that kind of makes that theory strong in my opinion is like the thing that makes Bitcoin interesting. Recently become a institutional grade capital asset. For the last 15 years of Bitcoin's history, it's been 100% retail driven. So you still have the laggard in the price section as a result of the fact that there are a bunch of retail people. And so you're clearly seeing the direct correlation on the alt market side, because that's 100% driven for, I don't want to say 100%, but it's mostly driven by the retail liquidity. I will say, Brad, ironically, that the feeling, this is kind of like what 2019 felt like when Bitcoin absolutely just freaking cratered, with the caveat being that everything that crypto people wanted back then has materialized from a regulatory or kind of institutional adoption standpoint. So it's weird because it's both got the same vibes. But back then you're like, maybe this won't survive as an industry much further into the future here. And so that's what makes it peculiar, in my opinion, is because it feels the same way, but at the same time, every catalyst or every like net beneficial thing that could be happening has actually happened, which is frustrating.
Yeah. And talking about the COVID crash?
Yeah, I think he's talking about
talking about 2019. 2018 after the not COVID.
Okay.
Yeah,
so when 2017, 2018 euphoria, and then September kind of came around and everything fell off, and then after December it was like fucking back straight to zero. I think Bitcoin hit like $3,000 at that time.
Yeah, oh god, I wish. Oh my god.
Ironically, that was my last big buy into Bitcoin was back then, but
beautiful. Yeah, it definitely feels like that a little bit. I mean, I wasn't in the crypto markets then, but I was around. I was in the stock market primarily, and there was that kind of vibe. It's a very similar vibe here. But ironically, we talk about retail not being here, but there's more retail traders than ever now than ever before in TradFi at least. So it's just very interesting to see that going up from I think it's like 10% like a decade ago to like now it's like 20 or 30, 25%, I think, of the stock market is the daily volume is retail traders now. So there's more people getting involved. It's just like, I think a lot of liquidity and like I think crypto hasn't pulled enough of the TradFi investors into it yet. That's what this price action here is telling me. Is that TradFi is not nearly as involved as we think they are. Like institutions are, but I think there's many TradFi investors out there, retail mainly, that aren't buying crypto.
Yeah. Well, and when you see what's happening right now with the amount of liquidations and manipulation taking place, I mean, I don't blame them for not wanting to enter right now. They're like, what the fuck is this?
Yeah, well, they're just saying "told you so." They're just like, "Ah, look, told you so." It's all just bloated, you know.
Yeah, I think they'll come in. It's just a matter of when, right?
Yeah, they always start with Bitcoin too. Like you had that is it the dividend guy? It's not the dividend guy. There was a dude that Andy would always your friend Andy would always talk shit with this guy. I forgot his name. On Twitter, and then he finally convinced him to get into Bitcoin. Like he was always talking shit about Bitcoin, and now he's a Bitcoin bull poster. It's fucking hilarious.
The things coming up. So once we get the Japan situation out of the way tomorrow, I'm curious to see how markets react to that. It'll be nice to have that behind us because that's been kind of overhanging everything now for weeks. And then obviously we need to find out if MicroStrategy is going to get delisted from MSCI. From MSCI.
Oh shit! Really?
Well, we don't know yet. I put a video out about this earlier this week about the FUD around MicroStrategy. It's worth watching. I break down kind of the details, but what they're trying to do is they're proposing a delisting project that over 50% of their assets are crypto. So there's a chance that MicroStrategy would get delisted from MSCI. They'd be the first ones to get delisted. So that's coming up in January. I believe we're going to know for sure. So Damn. That's still hanging over things. Yeah. So that's been circulating for a while. So we'll see there.
Is there more major news coming out in January too? I'm trying to remember what's happening.
I mean,
oh my God. Yeah. There's a Fed meeting. There's what the fuck else was there?
Maybe we'll get some more fake CPI reports.
Yeah, right. Dude, isn't that crazy? All the data that was missing from there. When I was like, when I read the report, I was like, what the fuck, dude? I was like talking to people in a chat, like, what is this? This is just a bunch of Fugazi.
I'm curious about that.
Fugazi.
I'm looking further and further into it. Like, I was reading that people were like, well, they didn't have all the data because the government shut down still. So they're like pulling external data, and that's like what they're saying. So I don't know, man. I don't know what to believe. It seems low to me, but
yeah. Oh, 100%, dude.
You know.
Well, it's hard to put credibility behind something that you know is going to change here in like, the next month or two. So
yeah,
it's constant like, oh, we're going to revise these numbers.
Well, their data collection methods also, I feel like, are just outdated. As opposed to, I mean, the government shutdown also didn't help the fact that they were missing on some of that data. But I think that a lot of the fact that the data has been skewed a lot, and we've had to do a lot of revisions this year. I mean, what was it back in April or June? They had that crazy mishap when in September they revised all those jobs numbers, or it was October. I don't know the exact month, but I think that just goes to show that there needs to be a better way to collect all this data.
Yeah, because they're doing like a ton of survey data. So it's always lagging. That's absolutely crazy. If you look at Trueflation, they use like real data metrics that they're pulling in real time.
Yeah.
It's archaic as hell, man. It's like ACH.
Like what?
That's gone now.
You want me to wire you?
Yeah.
Hey, ACH is still cheaper than credit card transaction fees. Just letting you know.
Yeah, I'm not surprised by that. It just takes days to clear.
But would you? Well, it's like, would you save 2.5% on each transaction to do ACH and wait 2 days for them to go through? I think the answer is yes.
I would use stable coins and
exactly. I use stable coins for less than a penny on Solana,
that's what's coming soon. Like that's not going to ACH will be a thing of the past. It's archaic as hell. But I hear you. Like if you can wait, you're not going to pay the fees.
Merchant services aren't going to give up that kind of scratch that easily. They're going to try to slow down the process and make it so you have to.
You're already seeing companies like Visa that are going to settle USDC on Solana.
Yeah, exactly.
They're going to settle it, but they're still going to charge you 3% or 2.5%.
That's true.
Doesn't Visa only charge 1%?
No, it's way more than that. Interchange rates in particular are like 1.85.
Oh, I was thinking businesses. I think they only charge businesses like 1.5.
No.
I think.
I can tell you what mine does. Give me a second.
Because I know Amex charges like 4%. I think, right? 4 or 5.
No, it's not that high either.
No, it's 3%.
It's like 1.85 somewhere.
Okay.
It depends on how much volume you do too. It can change. It changes a lot based on a lot of.
I've looked at those numbers for a long time. So
it's going to depend on how much competition is introduced because more competition will drive those fees down, right? Like,
yeah.
With the ACH though, I was reading that like because that 2 to 3 days, right? They're holding your capital, so they're like getting yield on that while they're holding your capital.
All right, here's the rates for an actual business. Okay, so standard rates for credit card. This is like MasterCard, Discover, Visa. It's not Amex. Amex is completely different. 2.75%, and then 30 cents on each transaction. ACH, 30 cents on each transaction, and 0.5%. So that's
what they charge you though.
Yeah.
The interchange rate is like a point less.
Yeah,
all that Visa Solana news would have pumped back in the day. Would have pumped the hell out of this. Look at Solana; it's like down.
Yeah,
bad.
nothing's fucking pumping. Dude.
It's crazy, dude. What the fuck? What market are we in?
Stupid.
It's so stupid. Bro.
I don't know, Brad, if I agree with the fact that like there's going to be increased pressure to decrease rates because Visa and MasterCard have had basically monopoly or duopoly on the market for the longest time.
Yeah.
The only thing that I think has a chance of saving that is that you get enough network effect by people that actually have means of payments outside of those rails where that's where the competition is going to drive the price action down. I don't see Visa and MasterCard lowering any of their rates just because they can make it more cost effective or because they're increasing.
Well, unless the competition
I don't think they'll.
Rates,
yeah, I don't think they'll do it out of the kindness of their heart. I think if there's more competition,
it's got to be
competition.
MasterCard lowered their rates first, then Visa's like, oh fuck, we're gonna lose customers.
That's the only way they'll do it.
Yeah, exactly.
And a lot of software as a service, they're requiring you to use their merchant services account because they get a kickback, and that's actually how they fund a lot of growth. So,
well, I mean, just look at what Stripe's doing, which is the number one online payments company in the entire world. First or second, there's kind of different ways you can skin that cat, but they're looking at. They built their own blockchain for stablecoin payments. They've got their own white labeled stablecoin solution.
Yeah.
Like those guys have clearly been ahead of the curve on the way the market's running. And so if they're looking at this as kind of the next evolution of crypto payments, then I think that that's more than enough of a justification for the competition that we spoke of is going to be coming in.
Mm-hmm.
Hey, if you own the means of finality of settlement, then you own the world, right? Because everyone's got a transact value. So
wasn't MasterCard developing their own, like they're not their own blockchain, but maybe it's like the MTN it was, right? It was like a connector of blockchains. I don't know. I heard about it at the Ondo Summit last year. It was MTN, what it was called. I gotta look that up.
They've experimented with some like settlements. I don't know if there's anything that's public. They are one of the kind of stakeholders, if you will, of the Paxos network, but
yeah.
God, who is it?
Multi-token network. MasterCard's multi-token network is a blockchain-based platform for financial institutions. That's what it was. Okay, interesting.
I forget who it is, but they have. I think it's JP Morgan. They have like a 300-person crypto team that they've just been developing in the back end for years and years and years. And they have I think they have a policy where they only do stuff on their own networks. Yeah. So. They're building the rails for the future of their stuff right now.
For sure.
They're on private chain, yeah.
I think you're going to see more and more of that too. Like even Tether and Circle are going to use their own blockchains. I think DePIN IPA.
Yeah, hell yeah. Fuck yeah.
I think
IPA, I don't got beer, hang on.
For these stablecoin issuers, most of their yield comes from holding treasury bills. And obviously the Fed's going to be dropping rates, and they do have a pretty direct impact on the short-term rates. So they've got to make that up somewhere. I think that's why Circle and Tether are creating their own blockchains to try to capture more fees, because they're going to have to offset the revenue losses from rates coming down. It's time for a bull market. It is time for a bull market.
Damn it. I'm so sick of this. Yeah, I need some life, dude.
2024 was great. That was fantastic.
I gambled on SPX today to feel something. I lost more money, and I was like, "Damn it!"
2025 has been terrible.
Oh man, oh God. I mean, it's funny because 2025 price action wise has been terrible, but the news has been amazing, right? Outside of like exactly, like we're getting bullish news after bullish news after bullish news. DePIN's making more money than ever before. Yeah, we have just this. I was
having a bit of an esoteric thought with myself last night when I was trying to go to sleep and I couldn't. I was wondering, in the last, since really the early days of Bitcoin, everybody's been talking about trying to kind of legitimize this, or when does this become the rails of the new economy and all these things. And I wonder if there's like everybody's, this was the milestone that everybody's working towards. And now that it's happened, there's just this like implicit defeat that's been accepted as a result of the fact that now we have all these things that they'd been wanting, and so now it doesn't even matter. It's like, well, who's the next team that's going to push this to new heights?
Nothing.
I hear you, and well, if you look at the price action last year, I mean, we moved from what were you like around 68, 70K last August, and we moved up above 100K from the Trump pump.
It dipped down into the 50s.
Okay, it was in the 50s. Yeah, that seems like forever ago, and it's just it was like a little bit over a year ago.
Yeah.
So I think a lot of the stuff that's taking place this year, was baked into the Trump pump at the end of last year. Like a lot of this stuff, people were like expecting all this regulatory stuff to happen. So I think a lot of that was already kind of reflected in the influx of capital. Then you have, I think Trump this year wanted to get a lot of like the tariff pain and all this shit. He wanted to get that done in his first year to give the next 3 years from to kind of rebuild things. So it's been a brutal year from that standpoint. Pretty risk off, really. I mean, the small caps have gotten obliterated, but you look at like the Russell 2000 until recently, it wasn't hitting new all-time highs. Like small caps have not performed that well in the stock market either this year.
Yeah. Everybody takes a sip of their beer at the same time. Nice.
I mean, it's that kind of evening, guys.
That kind of news.
It's that kind of news.
But if you look at, if you watch the Scott Bessent interview with Tucker Carlson earlier this year, they kind of gave the whole roadmap for what they're trying to do. I think next year is going to be a lot of deregulation, trying to get growth in the private sector. If they can do that, I think things will rebound.
Brian, your keyboard is so fucking loud. You need to lower that mic, dog. Holy shit.
Any
oops.
Tariff inflation should be trickling through to where we should see inflation coming down, I would think. Rent prices are coming down. That's like a third of the CPI calculation, so that should help. And then I think if he puts Hassett in there, man, like Hassett's going to cut rates. Yeah, good Kevin. You see Kevin Warsh is like falling out of favor very quickly in the betting markets.
What would have been a better instead of betting Hassett as the winner, it would have been a better. It's not an asymmetric bet, but I guess it kind of is to put bet long for Hassett and long short for Walsh. That would have been the play.
Yeah, I should have bought no on Warsh because he was up to like 54%. He's at 26 right now.
Yeah.
Yeah, some dude turned $1,000 into $100,000, mostly betting no's on Kalshi. Very interesting.
That's the way to go, man. I think Hassett and then Christopher Waller is an interesting one. I've been started looking into him. He's a crypto guy too. Hassett and Waller are both like crypto bulls. Warsh was like a big CBDC guy, which that's not going to fly. Yeah. And he's also like not going to cut rates. So we know what Trump wants.
Yeah, Hassett's back at 51%. Warsh is at 28%, and Waller's at 13%.
Yeah.
We should totally make a pick every night for Deep and Happy Hour. And like we all collectively, we get chats.
Polymarket
opinion.
Yeah, we can do Polymarket, Kalshi, whatever.
Yeah, like do a prediction market choice and see how it plays out. Yeah,
I do prediction market trading now on Friday mornings. I do it live on the Wolf Crypto page.
Ooh,
it's fun.
Who will?
So we have Real Monsters True Crime here saying, what did it say? Yeah, no, not that one. Sorry, this one right here. Any new DePIN projects that you think look promising? And for the sake of not sounding repetitive, I'm going to pass it on to everyone else here because I think everyone's already going to know what I'm going to shout out. So
we're probably going to sound like a broken record with the same DePINs that we're excited about every week, but in no specific order, it would be something to the effect of 375, GeoNet, Rover, Alki, most of those.
Silencio has gotten back on my radar. So, Silencio is one I've covered previously, and I was, the noise pollution data, I was like, there's a market there, but I just did, it's like, I don't know how big of a market that's going to be. I had them on, we had them on the space on Tuesday, and they've pivoted and I think found a product market fit with a much larger total addressable market, at least for the short term.
Yeah.
For the next year or two. So I think Silencio is one to take a hard look at, given that it's at a $1.59 million market cap.
No, 100%. I mean, I've been bullish on them ever since they mentioned they were getting involved in the voice AI data training and whatnot. And I've done some of the requests that they put out. I mean, there's not a whole bunch of revenue there for English language at the moment. There's not a whole lot of like stablecoin rewards for that, but I still do the noise pollution measurements every day. I get paid out every month in SLC tokens. I've been stacking, bro. I've been bullish on them for a long time.
I had an English campaign pop up yesterday.
Oh, I didn't see that yesterday. So
yeah, it gives you alerts when you go in there. Like it's still there. So
oh fuck yeah! Well, I guess I'm gonna make some more money. Here we go.
Yeah.
Speaking of the Silencia team too, I want to show you guys something. They actually sent me. They're sending me some items because these guys are so cool. I love these dudes, man. It's so cute. Here, look at this. They heard about the news that I'm gonna be a father, and they got me Silencio baby outfits.
Wow, that's awesome.
Look at that, guys. And yeah, I thought that was they said that they sent this to me like without me even knowing. They're like, "Hey, is this your address?" And I was like, "Yeah." They're like, "Cool, we sent you something." And I was like, "Oh shit, thanks, boys." Like
they're like checking your location, be like, "All right, he's there every day at this time. It's got to be his house."
It's all mapped around me. All the noise in my area is mapped by me. So,
Real Monsters, I don't know. For putting money in tokens that are outside of some of those projects, the ones that I'm particularly interested in keeping kind of money in, or just having the tokens, is the one that I think the revenue will be disproportionate to the amount of short-term price action, so that when things do start coming back, you'll have either at least a parity, or ideally you'll have kind of outsized returns as a result of that. 375 hasn't hit revenue yet, but I think that they are positioned very well for being able to turn that on. Obviously, GeoNet's on a hockey stick-like growth trajectory, so I think that's one that's interesting. And then, kind of in the same breath, Alkey's price action hasn't been stellar lately, but I mean, I don't think a day goes by where Nils doesn't tweet about either a customer that wants to expand, come on. He said something today about they wanted to have a customer that wants to invest, which I think is kind of the ultimate sign of validation. So
yeah,
it sucks short term because it's like 50% drawdown the last time I checked, but at least from when I put my last entry in. But I think in due time it'll come.
Well, this like the market being what it is really highlighting the importance of a good tokenomic structure. When the
tokenomics don't matter, Brian.
Well, for someone that hasn't been in the space as long as I think some of you guys have, like this is really like a unique situation where I'm like, I really am having to pay a little bit more to tokenomics, really having to watch what's going on. I'm not just avoiding bad projects. I'm avoiding projects that like just maybe long-term tokenomics wise aren't great long-term plays. And I've always been traditionally just a DCA in and just wait. And now I'm learning like, okay, I need to DCA in, but maybe I need to look at what is a year from now or 2 years or 3 years. What is the tokenomics going to look like or play out in the long run?
Mm-hmm. That's important. Brad and I were having a conversation about this a day or two ago, and one of the things that I think will actually get a bit easier on the investing side is that it's not as much because there's not a direct correlation with all this retail price action or retail driven price action where something spikes, Bitcoin, one of the major alts, and then everything just runs as a result of that, which is so that if you do have plays in or investments in plays that are not going to only have returns correlated to the rest of the market, I actually think you'll end up making more money. It sure doesn't feel like that right now. We'll have to see how that plays out. But I think if you're, no longer taking the spray and pray approach, because like even in the early days of DePIN, and this has been true for any cycle, whether it was ICO craze, NFT mania, DeFi, like literally everything just exploded in parallel. And so you didn't really have to make that much of a sophisticated bet around, what was going to be the winner. Obviously, there were dogs that were there, all the time. But for the most part, if it seemed like it had some prospects of being successful, it ended up at least giving you enough of a return that it didn't make it not worth your while. So hopefully there's going to be, I think in this case, like moving forward, because there's been so much retail liquidity flushed out and seeing this bifurcation between the institutional adoption and non-institutional driven price action, that the investments you make where they actually have the ability to create returns independent of just pure cycle dynamics, you'll see additional price appreciation. So I think it kind of codifies the idea that you're having strategically placed bets if you're actually optimistic on what they're doing for the tokenomics, the business viability, you'll see the return. It just is not happening at the moment because everything else is down.
Dare I say this is a healthy kind of stage then? If you look at it from that perspective, we're not tied to what Bitcoin's doing. We're kind of like uncoupled for the first time. Well, we're coupled, but not in a positive way. So it's an interesting position to be in.
Wouldn't you say, Brad?
I think there's some.
Man, I was sorry. I was just looking at Astrodex, and it's officially geo-locked out of America. Love that.
I think there's silver lining throughout this year, and like memes kind of getting wiped out, and a lot of the bullshit.
Yep.
October 10th was going to set us back, in my opinion, quite a bit. But as the market becomes more efficient and more mature, it's going to get harder and harder to make money in the space. But I think that's where like doing the research is going to set you apart. Like to Tyler's point, you can't just put money and expect everything to just go up like it used to.
Yeah, well, I mean, back then the markets were so new too. You could just do that. Like everything was so it was so cheap, so more highly speculative, and like, again, not as mature, much younger, as you just mentioned. So that makes sense to me that
it wasn't even about the market being mature or not. It was that every cycle, everything pumped within the meta of whatever that cycle was, and so that's where I think we're going to start seeing a change, which is that there's not going to be like the AI driven cycle as much, or some of these other catalysts, if you want to call it that. And so there will be select winners out of the vertical within crypto that they exist. And it's going to be predicated on they actually have something going for them to be successful versus just the whole category, taking off. Because it's like, how many more categories are we going to be able to have in crypto? We've had kind of the whole life cycle of every vertical that you could think of, whether it was financialization, kind of tokenized equity, now stable coins, AI, like whatever, like what else is next? And I just don't know how many more of those there's going to be. And so that's why I think it's going to be, though you'll have a few of the runners from each vertical, not just a whole sector going parabolic. And then you've got correlation from kind of the rest of the market.
Do you think those tokens will align more? Like eventually, do you think these tokens will align more with like standard business cycles or like the stock market in a sense, like the equities in the stock market, like and how they work and how those cycles work?
I think for the next few years, there's going to be a pretty direct correlation between the business cycle and the riskier, more risk on assets that exist in crypto. So like it's kind of a logarithmic curve between Bitcoin's probably got the highest and will continue to have the most institutional adoption. And then you'll see kind of this logarithmic drop off. And so as a result of that, the business cycle, I think, will create greater kind of non-sector specific return correlation. And so there's, but I think it's all going to be driven by the business cycle. Because like if you look at a company like GeoNet, for example, right? Like they went from $2 million in revenue to $7 million in ARR. Now they're projecting up to $21 million in ARR. But there's been no, like the token price hasn't really followed that. If anything, it's just sort of been flatlined. So that's where I'm kind of like, all right, what's the rationale for it? And I think it's because there's still such a high correlation to the business sector liquidity that's going to drive risk on assets. And then within those risk on assets, which are, again, more so with like a altcoin than a Bitcoin, that's when you'll really see the outsized price appreciation.
But can we attribute the token flatlining, this price action outside of the liquidity concerns you just mentioned? But can we attribute the price action to like the tokenomic structure as well, like the revenue not adequately providing a bid, or is there just not enough revenue, or like what's that about?
I think that is true to some extent, but even if you look at companies like, I know that we were sending this back and forth with Austin Federa from Double Zero, and he was, using Hyperliquid as an example. Like they are creating more and more and more revenue, and so that they're using to, play a similar style of tokenomics game. It's not 1-to-1, but it's kind of similar. So I don't know if this is just a tokenomics problem per se, or if it's because the tokenomics that should drive value are also as much, if not more impacted by these other variables, at least in the short term. And so until those other variables kind of are able to get parity with where fundamentals should be at, you're just not going to see the price appreciation.
That makes sense. That makes a lot of sense.
I think like you need both, right? There's kind of the liquidity driven price action, and there's also the fundamental driven price action. And so, I think the point to make, and like I put a whole section of this in my tokenomics valuation report, which is that you can have extended periods of what seems like price dislocation between fundamentals and what the fair value should be, solely predicated on liquidity and sort of net inflows that are existing independently of whatever the fundamental case is. And that's business cycle driven, I think, to a large extent.
Yeah, I mean, you need liquidity for the price to move. It's just like a no-brainer for sure. But I agree with you 100%. He mentioned Nubla in the chat here. I was actually looking it up. He said like Nubla, and I didn't realize the price had dropped off this much. Oh my god, this is actually crazy. Here, let me pull it up.
Yeah, I haven't looked at it
because I have a Nubla device in my backyard, and I got an airdrop from doing that, and I'm kind of happy I let go of most of that.
Under $1 million.
Yeah, here I'll post this right now. Where is it? Share my screen. Wow. That's the token right there. Holy shit! Yeah, so I had traded it right here in this area, and I think I'd let go. So I was only able to claim 25% of my airdrop. So I claimed it, and then I put it in Asterdex, tried to make more money out of it, did not do so, and then I just let the rest go. And yeah, then we had this massive fall off here. Holy crap!
Yeah. Well, they had their TGE and
right here.
Yeah, 2 weeks after October 10th.
Yeah,
it's like
insane.
I mean, like at like 375 AIs did something similar. Like, of course.
Wow.
Dip Elon in the deep end.
Well, at least with 375 AI, you had a massive run up, and then like it's kind of found like a nice little support on there. You know, it's not too crazy.
Yeah.
Like it doesn't look nearly that bad as bad as Newport.
No.
Like here's 375 AI just for reference to the audience here. I mean, I like this. This doesn't look bad at all, in my opinion. I mean, yeah, it's awful for sure, but like, I mean, I don't know.
It doesn't look good.
It doesn't look good, but it don't look that bad. It don't look like it fell off a cliff.
What about 00?
Yeah, isn't that 2Z? Yeah, right, 2Z.
Yeah.
Is it MEXC on here? Let's see, 2Z.
It's an interesting looking chart.
Yeah, I can pull up market cap. Let's do market. Oh my god. Oof.
Yeah.
It's like that meme sound, like oof.
Kind of starts to look like a race to the bottom here, you know?
Not good.
I mean, like, look at Helium here. Like, Helium's doing the same shit, dude. And Helium's making, what, 20 million ARR right now? Insane. God, this is the... That's why we're sad, Suburban, all right? That's why we're sad.
Just glad I sold what I sold.
Where is it? He said, why we sad tonight? Yeah. And then Super Scotty said, too much extraction throughout the market and more ways to do it. More and more ways to extract? What do you mean, Scotty? People just dropping meme coins again? Fake tickers?
Dude, I haven't bought a meme coin since Tyler stopped sending me meme
I should have bought Jelly Jelly. I'm just saying, I should have bought Jelly Jelly. This thing has been pumping, dude.
Love you, Tyler.
You know, I was reflecting on one of my last bigger meme coin buys was Pippin that I think, I don't know if I've shared this on the stream, but I bought right around Christmas last year. I saw that one of the Binance hot wallets had started buying it. And so I think I put like 8 or 10 grand into it. And this was at like a $40 million valuation or 40 million market cap. Watched it drop basically to 2. I think I sold almost all the way out right around 8, maybe a little bit less. So it took a total freaking hair loss on it. Like, you know, just everything down to zero. And then about 3 weeks later, I got a text from a friend that's not super into crypto, but I said, hey, you know, maybe this is the thing. This is what I saw. And it had absolutely ripped up. And then I got a Coinbase spot listing a couple days ago. And so that was like a nice 100 or 10x that I missed out on. Another one. So, you know.
Ouch. And that's the problem. Another one, right? Like every time I get involved, I'm like, oh, I'm going to get in. It's going to be fine. I get in and it drops. 2 weeks later, it spikes or something like that.
Suburban, that's funny. Yeah, fuck you, Suburban. No,
fuck you, Suburban.
Congratulations.
What the fuck, dude? I'm banning you, dude. What the fuck? Get out of here. Best decision
and
ever.
You're gone.
And you're gone. Really awesome news that came out on Friday, I think it was, from Aether. They said, I don't really know how much of an effect this is actually going to have. It's just a little bit of a rebranding, but they said that predictive oncology, the Aether DAT, the DePIN DAT there, rebranded to Axe Compute. Axe Compute is now the first publicly traded company with plans to expand its business powered by Aether's decentralized GPU cloud, a milestone aimed at bringing globally distributed compute into the enterprise mainstream. I love the M dash here, by the way. The M dash here.
I don't like the way that you read that. That made me so uncomfortable, Will.
Yeah, I was trying to be as cringe as possible.
Do it monotone. Read it like it's the worst news you've ever seen.
I think they watched one too many episodes of Billions. That's why they were like Axe Cap.
Axe Compute plans to introduce a new model for AI companies, high performance compute.
I like it. New operating model.
Basically, this is just kind of a big nothing burger, I think, because it's just like they just changed their name. I don't know.
It's a Billions reference. Have you guys seen it?
That's actually funny. I just got that. Holy shit. You're right. Like Axe Capital. That's so funny.
Axe Cap.
And that guy's a piece of shit. So that, oh my God, makes sense.
Great actor. Love the guy. That guy's awesome.
I mean, yeah.
Great show too.
He's an amazing actor for sure.
That's one of those shows that I've only seen clips of, but my takeaway from the clips that I've seen is that is a specific role that would be hard. You know how like some roles are so category defining that you can't get a job doing something else? Like Steve Carell kind of did it outside of The Office. But I put like Steve Carell with, The Office, like a Harvey Specter type role that it makes it really difficult to go be an actor outside of that. I put the Axe Capital guy in that category.
No, he was in Homeland.
It's Sergeant Winters. It's Sergeant Winters, bro.
And HBO's
Band of Brothers. The show make you fucking cry. I love that show.
All amazing. Great actor. Very, very, very capable actor. I really like him.
It's Daniel. What's his name? Daniel. Shit. I gotta look it up.
By the way, if you follow me for any entertainment advice, you are sure to be proven wrong because I don't watch shows for the most part. So.
It's not proven wrong. It's just dry. I mean, like there's a desert there.
Sure.
Tyler.
By the way, should we put 100? Should we put 100 on Japan not raising rates because it's only a 1%?
Oh shit, dude! I kind of want to do that. Is that on Polymarket?
It's on Polymarket. It's on Kalshi too.
Put me down for. I'll pay a quarter of that. Is that our bet today or no? As a show?
Just a happy hour bet.
Happy hour bet, $100 bet.
Quez isn't going to be here if it pays off. He's going to be like,
maintain current rate 2%. It's a 2 cents on call sheet.
I mean,
do you have something like a lower rate hike, or is it just a binary on or off?
Here, I'll share my screen. You can look at what I'm looking at.
Never know. We dropped rates, so maybe maybe we'll see what happens now. I don't know.
Who knows? We didn't announce war on Venezuela. That's good,
Is it? Here you go. Look at this. What will the Bank of Japan do at the December BOJ meeting? We have a 99-cent contract for hike 21 to 40 basis points.
So what's weird on the Polymarket is that's call sheet on Polymarket. No is showing 0.
I mean that's the spread, right? That's the arbitrage you could play with the markets here.
On Polymarket, you're seeing 0. Where?
I'm
seeing 2% on Polymarket for no change.
Oh, that's for decrease rates. Oops. Disregard.
Is the US platform out for Polymarket yet?
No, you gotta use a VPN if you want to bet.
Damn.
Yeah, no change is 98.7%. Give me a little payoff.
That's so interesting.
10 grand or 9,800 bucks.
For a $100 bet, dude.
I mean, that's not bad. That return's great. I mean,
never know.
Hey, who's placing the bet? I'm good.
That's where retail's going, guys. Retail's going to prediction markets. They fled crypto. They went to prediction markets. That's the new meta.
Yeah.
It actually, I still think prediction markets, while they've had massive growth this year, I still don't think a lot of people have any idea that they're there.
No.
Oh, 100%. I mean, when I talk about betting on sports, like people always look at like the standard sports betting apps, they don't actually think about call sheet. And I'll show them call sheet and they're like, wait, what? And they scroll through and they're like, oh shit, this is sick.
So maybe 2 months ago in my fantasy chat, I was kind of telling them like, oh, I'm gonna place a bet on the government reopening because one of the guys, he's like in the military and he's like, oh yeah, I think blah blah blah. And I'm like, oh, you can bet on this. Like you could actually, you could make some money. And then I said, well, if you want some real hedge fund level analysis, you can leverage some of these DePIN weather networks to be able to try to front run the data on the highest temperature that's going to happen in a day, or like in a specific area, because a lot of times they use kind of generalized sensors. So I sent that, didn't get a fucking response out of anybody. And then 2 months later, my brother-in-law was in my fantasy league. He texts and goes, "Did you know that you can bet weather predictions on Robinhood now?" And I'm like, "Yes, my friend, I did know that, and I helped give you a bit of an edge if you wanted to actually bet on them, but no one ever listens until it's too late."
The next use for DePIN, betting on prediction markets, getting up to date, and yeah, that's crazy. Sorry, I don't even know what to think about that. That's kind of a wild way to use DePIN, but yeah, it's a wild way. Yeah.
The reason I even know this was because when I was talking to the Weather XM guys maybe 7 or 8 months ago, we were trying to get a podcast episode schedule, and so he was showing me some of the data that they were like, "Oh, this is eventually going to be leveraging these different prediction markets," and he was showing how like they were able to be more accurate within kind of that 30-minute to an hour time window. He's like, "I spend some of my time just looking at these spreads and seeing what can be done here." I'm like, "Are you indirectly telling me I should start betting on weather markets? Because this is kind of compelling." But
well, parametric insurance is gonna be a thing of the future. And it's something
parametric insurance.
It's called parametric insurance.
You tell, Brian.
Well, it's based on basically provable metrics being met to pay out insurance policies. So instead of you having a coverage on your roof, you have to have an adjuster go out. You put a device on your roof. It says, "Hey, hail hit here. It hit at this velocity, this many strikes per meter, or whatever," and then it pays out.
Like CertaStrike?
Yeah, or another company, but yeah. Anyway, it's a thing of the future, and there's people trying to put it in place, and I may or may not help develop something that we're licensing out to a roofing company. So anyway, we'll see if they commercialize it. So
yeah, well, that'd be cool.
Yeah,
that does seem like the way of the future. I mean,
we actually had an audience member ask you a question, Brian. So I want to pull this back up.
Yeah, cool. Okay, so ETS, so the CertaStrike app's actually like done and ready to go. But we pitched CertaStrike over to a company that manufactures roofing materials. I'm not going to name the company because of an NDA, and they loved it. They actually loved it. They were looking for something similar to an offering from one of their competitors, and we found it. Well, we basically gave them an avenue for it, and gave them a way to have even more of an edge. And they, instead of trying to work with us, they said, "Hey, why don't we just buy the IP off you in a licensing agreement?" And we are close to finalizing that deal right now. I think it'll close mid-January. But we have some restrictions on the way they use the IP and timelines for if they don't use the IP and commercialize it within a certain amount of time, we get the rights back. And, so it's a complicated contractual thing, and it kind of has everything in development on CertaStrike on hold until we kind of finish ironing this out. Because, if I'm going to license it out, why dump a bunch of money into developing it at this point? So we'll see. And honestly, where I'm at in life and where everything else is at, it kind of makes sense for me to go that route with CertaStrike. But honestly, it'll be great to see a multi-billion-dollar company pick up the IP and actually run with it. So
I feel like we just watched like Silicon Valley like live with Brian here. Like he did a whole startup while we have gone through happy hour, and is now like selling IP. And it's a beautiful thing, man.
But the interesting thing is a lot of the conversations I had were a lot of logistics conversations with them, because they were talking about production cycles and predicting where to send roofing material, right? So like if we in Fort Worth have a huge hailstorm, they need to have materials being brought into the area to help roofers recover, right? Because if there's a lag time, what do your competitors do? They go to another roofing material that's on hand because they want to put those roofs on and make the payday.
The other cycle is early alert systems and doing like parametric insurance, warning systems, giving and selling that weather data to roofers to be more efficient, and having contracts with them to exclusively use their material for the rights to that data. So there's a lot of interesting things that they can do with it. So we'll see.
Guys, sorry, really quick. Grass apparently 3 days ago, big news. They did $250,000 of open market buys, dude.
How much?
250K. Followed by that was 100K before in November, but they did 250K this month.
Brad looks so unimpressed. It's just like hilarious.
That's why I said it sarcastically, of course. I was like, oh, wow, look, stuff coming out of Grass, dude. We haven't heard about them in a while.
One of the other things that I was talking to Brad about maybe 2 days ago was how I'm generally, I shy away from trying to buy projects that have a lot of airdrop participation is kind of the primary distribution mechanism because all you do is see sell-offs, which is why I waited a little bit on some of my initial 375 entries. Not that that's the primary mechanism for them, but anyway, the caveat to that trend being true across the board is Grass has actually been able to maintain price stability quite a bit better than a lot of other projects that just outright airdropped.
Yeah, I don't know how they've done it. Really.
I don't either.
Just cruel fate, I guess. I don't know.
Maybe they're just generating so much revenue or they're paying a shit ton of.
I mean, granted, Grass token's only 28 cents now, but
yeah, wasn't it like $3?
Yeah, so it launched and immediately pumped from 16 cents all the way up to $3. Sorry, $4 almost. Almost $4 in a matter of how long was that? That was October of last year, all the way to November. So within a month or within like a couple weeks.
But the fact that they're still twice nearly as much as their initial launch point, everyone else has done something quite a bit different for the most part.
Yeah. I mean, I guess it's bullish.
Crypto
right?
Scotty, I like Grass.
Speaking of Grass, didn't Trump just sign a?
That's the other Grass.
Yeah.
Wait, he signed something about marijuana? What?
Yeah, moving it from Schedule 1 to Schedule 3.
Yeah,
or schedule.
Did he sign any executive orders today? I wanted to look that up.
That was one of them.
I think that was one of them.
Yeah.
Okay, so maybe that was the thing that the guy was talking about. I don't know why he mentioned crypto when I heard him, but there was a guy I overheard at the airport talking about that.
It's like there's this direct correlation: marijuana, crypto. It's all in the same.
Well, he was on the phone and he mentioned like crypto billionaires or something. He's like, "Yeah, get your crypto billionaire friends to invest." And I was like, "Oh, okay. Like maybe he's talking about crypto. I don't know." But he's like, "I've confirmed that from the White House, like from a source I can't disclose, that there's an executive order with language favoring us."
Coming Trump on did Thursday. Say, I mean, he says this a lot too, right? But I think he said today that they're going to sign monumental crypto legislation, and he used the word clarity, or maybe it was market infrastructure that'll provide clarity. So I was like, is that a nod to the Clarity Act? But I think he says this all the time just to try to keep people excited.
He's my son. My son needs to make more money. So young Barron, we're going to get him to make more money this time. Pump the markets, Barron.
Yeah.
It's going to be magnificent.
Waiting for the magnificent pump, the Trump pump.
Has anyone figured out who the insider is, by the way, the insider trader that did those crazy hype trades, hyperliquid trades?
I doubt we'll never know.
Damn.
Could we say that Biden was probably better for the crypto markets than Trump was at this point? Because
that's a contentious question, Brian.
That's going to go viral now. Trump's going to watch this and be like, what a bunch of losers.
Here's what I will say is that on one hand, the previous SEC was clearly a problem for crypto.
Yeah.
At the same time, Brad alluded to this a little earlier. I think you can trace the catalyst between retail or just alt markets dying off to the Trump meme coin launch, because there was so much liquidity that was sucked up through that and then went all the way up, went, down. And then obviously you had what happened in Argentina. And I think there's a lot of people that said, oh, this is going to be the next thing that like the Trump coin and, between Trump and Melania. So I think maybe the long-term net benefit could be positive, but I think the short-term action has been there's probably quite a direct correlation between what we're seeing and all the way back to the meme coin launch.
Yeah, I think this year probably would have been more bullish, but I don't think we would have had the pump at the end of last year that we had. Right, we would have had, and that whole pump that we saw in that like 3-month period, I think would have been drawn out over this year. I do agree with Tyler though. I think with the stuff they're putting in place, once the banks are integrated into all of this and stablecoin issuers and all of that, like I think long term, we're going to be much better off with the regulatory environment that is being put in place. But this year has been freaking terrible.
Yeah.
Like,
I also don't know if Biden would have been putting a Fed chair. I mean, obviously he wouldn't put a different SEC person in, but I don't think he would put a Fed chair in that's going to just print money to oblivion. And so when that happens, I think you'll see these asset prices starting to move even more quickly because there is going to be the kind of dilutive effect of the dollar. So that's going to turn into assets.
Yeah.
So
we probably would have seen more rate cuts this year.
Yeah.
Because the tariffs caused Powell to like put a pause on.
That's true.
Rate cuts.
That's a good point.
I mean, M2 is at an all-time high already, like right now. Literally just like bounced out of that little dip it was in.
Yeah, well, every country's printing. even though Japan is raising rates, like they just printed like $135 billion stimulus package like 2 weeks ago.
Yeah.
China's passing stimulus packages.
It's going to take some time for all that to run through the system though, right? It's going to take a little bit of time.
Yeah.
Yeah. I mean, $40 billion it being injected into the economy by the Fed now with those treasury buybacks.
Yeah. Yeah.
Well, it's stupid expensive to borrow money right now. So as soon as that goes down, the market's going to be moving. And
aren't mortgages down right now? The mortgage rates are down?
Starting to fall. But I have a lot of friends that are pretty high up in real estate, and they're saying that they're not having any issues buying, just because
buying
or selling, excuse me, or doing transactions.
When they're not having any issues selling houses right now? What the fuck, dude?
No,
where are they?
After Dallas Fort Worth area.
Dude, Florida's been abysmal. My cousin, who's a real estate agent, she hasn't sold a single house this year.
The amount of listings in Dallas are high right now. Like people are delisting because they're not willing to lower prices. Is everything I've been reading.
It seems to be that at a certain level, like nobody cares. Right. As soon as you kind of dip down to like the average house cost, so like you get to like to the $500,000 or $300,000 houses, whatever it is, that's where you're really hitting the problem. Once you're over a couple million, not a problem.
That's
bullshit, dude. What the fuck?
That's sample size.
I'm just saying
because that what you're experiencing.
There's a $5.5 million home that we own in the Keys right now. It's not selling. It hasn't sold for fucking a year, dude.
I'm just saying what they're saying.
Brian, because what you're also saying is that like, you know, the top couple percent own the majority of assets in the market and they're doing fine. But there is this bifurcated economy that you have right now between those types of people that can go out and afford to spend $5 million on a house and interest rates aren't necessarily a factor because they'll either borrow against their money or they'll just pay cash for it. And
or they'll
that are in like
buy it and then refinance later and at a more favorable rate. Yeah. So it there's just the two different mindsets.
Another bad take from Brian.
Hey,
bad take from Brian.
I'm just saying
Brought
what
to
my
you
real
by
friends are telling me. They've literally sold 3 houses this month. Like they're insane, but they deal with a very high-end niche client. You know,
that's
versus,
why.
Yeah,
that's why.
Did I not say that? I did lead
the housing market's fine, guys. What are you
housing
talking
market's
about?
doing phenomenal in Dallas Fort Worth for all houses sold above $10 million. It's like,
what are you guys complaining about? I've sold a $20 million house yesterday.
I did say there seems to be a split, right? Yeah. Okay. Anyway,
we're just giving you a hard time.
Give me a hard time. That's fine. I'm gonna drink beer. We're good. Cheers.
Yeah.
Not my fault. You can't sell a
Highlands?
house, Will. It's not my fault.
I'm not selling houses. What the fuck, dude?
$10 million house in the Keys that you got to sell, bro.
It's part of the liquidation of my grandma's estate, bro.
Why are we not there right now, guys? We could
go there. If you guys want to go to the Keys, let me know before the house sells. Let's just all vibe. It's around the water. Just saying. We can take a boat out.
My house would sell for under $500,000.
You guys want to do a live DePIN happy hour in the Keys? Let's do it. You guys want to go? You guys want to go in January? I don't think the house will sell by then. There's plenty of room.
Depends when. I'll be in Vegas for 4 or 5 days.
In January?
Yeah.
For what?
Work. You want to go? Let's go.
I could go. You want to fly me out, big boy?
No. I'll be there from the 8th to the 11th. So if you're in Vegas, guys, let me know.
I might be going to a poker tournament in March on Wolf's behalf. Might be representing them in a poker tournament.
Nice.
Pretty cool.
World Series of Poker.
That'd be sick.
$10,000 buy-in.
Wait, you're doing that?
No, I want to. That'd be fun.
Oh, dude. Maybe that's why I should.
Tyler's gonna buy. He bets $10,000 on meme coins. He can pay for us to play some poker.
Yeah, come on, Tyler. Bankroll us.
I'm not big. I don't have my inheritance yet, guys.
What are we looking at, Brad? What are we looking
at? Check out the liquidity that's going into the market. So there's a bunch that people know about this one, right? Like the treasury bills we're buying.
Yeah.
So this started on the 12th, so 6 days ago. So 8 billion there, 6.8 billion here. We had another one yesterday for 8.1 billion. Another one tomorrow for 8.1 billion. So like the treasury bill purchases are happening.
Yeah, they're buying the 1 to 4 months, it looks like, too. Yeah.
Oh, yeah. And then this is the Treasury the general account. So it's like their checking account. So during the government shutdown, this ran way up. And we couldn't spend all the money. So we had like 957 billion, 958 billion sitting there. So just in the last month, that's down 120 billion. So that's 120 billion that's gone into the markets over the last month from that account.
Mm-hmm.
And then the overnight repurchase, the repo market, we're still funneling money in the banking system here. So, you look over the last, I guess that's a month and a half ago, but 4.7 billion there, 4 billion there, 13, 11, just the other day, another 5 billion. So there's liquidity entering markets. It's going to take a little time for it all to
trickle through.
Yeah. But
trickle down.
Trickle down.
The repo market isn't really. I mean, it's basically banks getting liquidity, for their treasuries, and they promise to buy them back in a short period. So it's not really like QE. But if you continue seeing this type of trend, it kind of is. And but this is the big one, man. Like they're going to continue purchasing this. Back in like 2008, when we had like the massive QE, we were doing like 80 billion a month. And right now we're doing like 40 billion a month. So it's not like we're that far off from what we were doing back then.
Yeah.
So,
well, you are starting to see it a little bit more. Like last night, I don't know if you guys watched the little bit of a nothing burger Trump speech, but he's going to give $1,776 to 1.5 million active military members, which
I didn't hear that part of the speech, but I was watching it because I bet on Maduro. Remember, I bet on the word Maduro, and it never happened. So I cashed out early. I cashed out right before the speech ended, and I was like, "All right, I recouped half of my money, so I only lost 50%." And then the speech ended, and I was like, "Yes,
yeah." But that's a couple $2 billion to throw at it. It's not huge, but it's still. I think it's the early seeding of what's going to be happening, which is there. When you talked about the largest tax breaks that people are going to have, it'll be like $10,000 to $20,000 of tax reductions that you'll see on your bill this year.
Nothing stops his train, bro.
Plus aside,
he's now put him in a really tough spot if they try to vote down and call his tariffs unconstitutional. He's gonna be like, "Oh, you're taking money from the military, huh?" Like, just keep it. He's kind of set him up on that a little bit.
He really has.
Left Supreme Court.
Oh, you're going to take away their Christmas bonuses? Yeah, that's going to happen.
He's pretty good at. Know how to play those games.
Well, I mean, basically, the government and the Fed are basically backing themselves into a corner now where they just have to print. They have to spend money. They can't not spend money now. Like that's not an option anymore. They have to spend. They have to print. It's inevitable. It is inevitable.
Mm-hmm.
Money changing hands is a positive for the economy. And I think people, think like, oh, it's positive when people like hoard cash and stick it in their bank account. Realistically, that's
that's Keynesian economics, is like the belief that you need to have money circulating through. You need to have more people borrowing, more people spending. You need to have a Federal Reserve there, kind of controlling the flows. Which I think, has helped us get to a certain point for sure in terms of growth. But you always reach these moments. You've reached these points in economies where, what is it, 130% debt to GDP ratio right now? there's no going back from that. That's over. I mean, like that's something I've told a lot of my friends and family who think that, you know, some new president is going to get us out of this, or Trump's going to fix this. And I'm just like, no. Like, you don't understand. This is beyond that. This is beyond any president. That there's a single president will not be able to fix the problem we're in. It's just not happening. It will not happen.
There's no president that's going to be willing to go through the amount of pain.
Yeah, political suicide.
Yeah. There's no way that it would be so unpopular. Like, absolutely not. I don't see it.
And you need more than 4 years. You need more than 4 years of that process, and it just won't happen. It won't happen.
Yeah. You pretty much. Go ahead.
No, go ahead, Brian. I'll say my.
I was just gonna say you pretty much have to say, "Hey, we have to sacrifice now for our kids' futures."
Yeah,
and have everybody kind of go, "Okay, we're buckling down. We're gonna knock this thing out as a country," and then agree to set policy that makes sense. You know.
Yeah. So one of the things that Crypto Scotty just said was, I heard tariffs would cost American households $1,700 this year. On that point, one of the things that I'm not sure, I haven't heard anybody talk about this or kind of rebut this, but Trump has said two different things. One was that he raised $18 trillion from external sources.
Oh,
trillion or billion?
He said trillion.
He said trillion. And then he said that we've taken in 18 trillion in tariffs. And I'm like, that's the same number. Which one is it? Like, are you just misspeaking, or what's the thing? Like, there's no way that they've been able to take that much money in tariff revenue.
No.
There's no way.
None of that.
Trillions.
No, that's correct at all. I did the math on like what the projected tariff income is going to be, and it's going to be like, I think it's like 280 billion to 300 billion a year when things settle.
How many multiples is that over our GDP? Like, there's no way.
Yeah, no, there is no way. Like, I don't know where he got the 18 trillion figure. Maybe that's. I would bet that he was talking about using tariffs and negotiations to get in like investment pledges from all these companies. And maybe he's like adding up all of the investment pledges that he's gotten so far that, well, we still have to see that those investments come through.
Materialize.
But, you know, he got like trillions from the Saudis. He got trillions from, you know, and then think about all like Apple and all these companies that are pledging investments. Like he did get a lot of pledges of investment. That has to be what he's talking about. Like he's considering that tariff.
$1 trillion. There we go. It's 19 now.
Careful what you say.
Well, there was a hot mic moment where I think it was Zuckerberg was at the White House, and he's like, Trump
didn't know the number.
Yeah, Trump was like, well, why don't you tell us how much you pledged? And he's like, I don't know which number you want me to use. It was like a hot mic moment. And Zuckerberg was like asking Trump, like, what number should I state?
I don't think he had a number. I think he's like, I didn't know what number to say, and so he kind of like made it up as if it was.
Yeah, it's all made
up. What it was. That was after the
fact.
That was after the fact. After he said the number, afterwards, he's like, I didn't know what number to say. So you get like a hot mic moment. Yeah, yikes. That's what it was. So it's like, I mean, so who knows how much of this is going to be real? Like some of the countries, their pledge like from investment was like 3 times their GDP. It's like, how is that going to happen? You know,
we have a question from King. King Made Lawn Care. Yeah, King Made Lawn Care. Here you go, Brad.
As far as deployer tools, yeah, I've like there's always been workarounds I've had to do. Like we did have, and I know they're working with Fractals on a fleet management tool, but before that, there's massive workarounds. Like I have a lot of tutorials on my channel about this, about how to track wallets, how to set things up separately. It's a pain the way they have it set up right now. That's why like I'm talking to the Fractals team about getting something done. And I've had many discussions behind the scenes with Ariel about this, about getting it done. Like that was a huge miss because, you know, before they started shipping the B, it's like, hey, you need to get these tools done. And it was like right before they were shipping, they like made an announcement that, hey, someone from the community should build this. I'm like, that's too late, man. Like you missed the mark on that for sure. So I've had to find workarounds. I know there's somebody in one of the Discord groups I'm into that's been building out some tools. I think Fractals will get it done, but it's a pain.
How hard would it be to build a fleet management tool for Hive Mapper?
They,
I don't hack it on the weekend and just sell it for like $10 a month. Would people pay that?
I think people would, but I think Fractals is building it out. I imagine it'd be a bigger lift than what you'd think. I worked with the first team that built out the first tool, and they only had a 2-way split, so there's still like manual work there. And I don't have any dev skills, man, or else I would have built it out myself. Like,
I'll do it. I'll do it. I built my own tool for my healing deployments, and because I just wasn't satisfied with what was out there. But then trying to make it publicly available was too much work that I couldn't. I was like, I don't know if anybody would actually be willing to kind of pay a little bit just to cover the additional cost of running it. So I just never pursued it. But
yeah, I'd just connect you to Ariel. You know Ariel, so
yeah.
It's, and if you have like a business, obviously it's not hard, but like when you have separate drivers or you have to do token splits and everything, like it is definitely a pain. So that's something that they missed the mark on. I mean, there's been a handful of things, right? Like, and I've pushed him on these things in the quarterly AMAs. One of the things I pushed really hard on was transparency and what are they going to do for the token price, and they started, showing showing the burns like in the wallet that everything's taking place. Like they've been very transparent about things now. Like started doing open market buys. So there's things that they've done, but there's still things that they need to work on. I think they're also probably, they're always working on so many different things with their resources they have. It's like, well, that's the problem with a lot of startups and a lot of the DePIN projects is like, and I've worked in the startup space, your resources get strained and you have to prioritize what to prioritize and what not to, So
yeah.
It's a good question, man. I don't know. I don't work for HiveMapper, so
what? No
if
way.
If I did, it probably some of those things probably would have gotten done, actually. But Brad, just out of curiosity, like obviously I'm a big fan of the Fractals team and the movement, what they're doing, and I've seen that they've kind of taken over the XNet token distribution. But in terms of the level of effort or the lift that's required to build a tool for something that a deployer could utilize, like what piece of it does Fractals bring to the table that makes that quote unquote possible versus just a developer that could go in and kind of build a UI that could manage some of the, I don't have a HiveMapper fleet. So part of it is ignorance on, I don't know exactly what the pain points are, but like, why is this something that you sort of need a Fractals like solution on versus just another person that could go out and build a way to track and do splits and whatnot?
Yeah, I don't think you necessarily need a Fractals to do it. Like the first group that built the first token splitting tool did it in conjunction with HiveMapper. HiveMapper basically, I believe they contracted them out, and it was within their fleet management dashboard. So I don't think it's like something that can't be done. But they didn't have all the features that I wanted. Like I wanted a multi-token, like 3 or 4-way token split. Mm-hmm. I wanted better ways to see the earnings per vehicle split out. Like there's certain things that I wanted built into the tool that didn't get built into the tool. It was enough to get by. There were things that if I hadn't worked closely with them would have gotten left out. So I'm glad I was like at least working with them, on that. But I think I don't think there's anyone preventing anyone from doing it. It's just like for like a Fractals, it's just another thing they can add to their suite. And they have deployers that are probably deploying with multiple businesses. So they can double, triple down on revenue streams. So it can be worth the lift for them versus having something that's, if you're building it just for one project, now you got to drive people to that tool. And, you don't have diversification like Fractals has with working with so many different projects at once. Right.
Yeah. Interesting. Yeah, no, it's a big challenge. Like, I was kind of wondering, like, what are the tools that are missing in the DePIN space for ensuring kind of mass success? We've got some of them in Helium Land. You've got Hotspot and you got a few of these others, and so they're there. I was just curious on what's the disconnect on the HiveMapper side, because it feels like something that if someone's technically inclined enough, like going out and building a tool that could be used for some of these fleet management isn't that. It's not that difficult. It's more or less a trivial thing to build. It has already functionally been done in other networks. So I was just curious what the, roadblocks or maybe some of the larger lifts that would make that less of a, this is just a thing a hobbyist could do. And
yeah, I mean, and Dema is another one never built out a fleet tool. That was all manual. And they kept changing the app. And they weren't talking to large fleet deployers about what they can and can't remove, things that we were using in the app, and that got really frustrating. And I was like, before you guys make changes to your app, why don't you talk to your large fleet deployers about maybe I shouldn't remove this? So that turned into a freaking nightmare. But you know what? They weren't really wanting people to build giant fleets, frankly, because they weren't getting the engagement with their apps.
Yep.
Anyway, so it wasn't adding much value to them. My idea that I pitched them, and I don't know, I wish they had gone this route, and I think it's becoming more and more clear they just wanted to get everyone over to their new hardware and off the old hardware. But their app was set up and the messaging was set up in a way that I think most people thought their data was being shared automatically. And I think most people were under the impression that, hey, we're getting tokens because our data is being shared. That was not the case. You had to opt into every specific app in order to share your data with those apps. And if you didn't do that, they were getting zero revenue off those connections. So what I told them was, hey, why don't you give them an option? Hey, auto opt in your data to all of the apps so they're generating revenue from every app they bring on. And that by doing so, you can avoid having a monthly fee. They decided not to go that route. And I think a lot of cars are disconnected now because of it. And I think that was a huge miss. It was a huge opportunity to drive revenue and keep people connected, and they didn't do it. I'm sure they had their reasons. I mean, look, Alex and Rob are super, super smart. So I'm sure they had their reasons. Rover crushes a startup. Rover did crush it as a startup, but you have to keep in mind, they had Mike Horton in their corner the entire time to build out all this stuff. So that was a huge win for them. One of the things, though, that I think people need to realize that are in early with Rover, and I think it's a great project. A lot of people are complaining about, the rewards on HiveMapper, etc. Guys, there's a halving event with Rover every April. So right now, it's the early days of HiveMapper,
or any DePIN project for that matter.
Any DePIN project, the rewards are crazy normally at the very, very beginning to get people going.
Mm-hmm.
But keep in mind with Rover, your rewards are going to get slashed in half very soon, and they have a very similar unlock schedule to what HiveMapper had. The market cap's low because they haven't seen a ton of unlocks, but employee unlocks start this month, and they're big. And we had an investor unlock start in September. I have a video on my channel about this, but there's going to be a ton of dilution in Rover over the next 2 years, and they have that halving event. So keep that in mind. People that join in 2-3 years from now are probably going to be looking at you guys that are in early and be like, oh, this is bullshit. You got so many rewards, same thing that HiveMapper is dealing with. So
Crypto Scotty, Demo sucks.
That's another one that they had.
You're right, except for a lot of these blue chip DePIN projects, they've been emitting tokens for half a decade in Helium's case, 3-4 years in some of these other projects' cases. So it is true, but to Brad's point, that continual dilution does impact things. And as you've got halving events year over year, every 2 years, however it is in the tokenomics, that does start to dramatically impact things.
Yeah,
the fucking early days of the CBRS units with the boosted things, it was 30,000 mobile token a day. Now, granted, there's no liquidity for it, but you could be a mobile millionaire in a few months.
Yeah,
that's wild.
Man. Rover and HiveMapper, I wouldn't say are competitors.
Isn't Rover doing LiDAR?
Yeah, Rover's collecting LiDAR data. It's a different data set than what HiveMapper's doing. So I think not only do I not think that they're competitors, but even if they are competing in the same space in certain aspects with some of their data sets, there's so much demand right now and so much need for that data for autonomous vehicles, more than what any of these projects will be able to collect. So
There's enough room for them all to play.
There's enough room for multiple players. Demo sucks. Dude,
I unplugged Demo as well. That's what he said, bro.
Demo had
they drop Web3 altogether?
Really,
pretty much
did they? I got my 40 cents in Demo tokens the other day.
They haven't dropped Web3 per se. They're a lot less active on their X page. Like, it's just frustrating. Like, they had such a big opportunity, in my opinion, and not to say that they can't do well at the pivot, because they are selling a bunch of units through Amazon, and they've created a lot of big partnerships outside of the US. So I think there's an opportunity there, but I think that they messed up a little bit. The airdrop at the beginning was too big, as before I even joined the network. And then I think with their subscription model, they could have gone about it in a different way to keep people connected. I just don't think that the messaging was very good. I think people misunderstood what their purpose was as participants. And, you know, they were adding all these apps, but they weren't driving any usage to the apps. And that's what generates revenue. There should have been an auto opt-in feature at the very beginning when you connect.
100%.
And think about that. I mean, every app you connect to is $1.25 a month in revenue. Like, if you would have auto opted in and had a free connection, they would have been generating a lot of revenue. Yeah, I'm not sure why they didn't go that route, but I'm sure they have their reasons. But yeah, it sucks. And then they had the exploit, right? Someone hacked one of their rewards wallets. That's why there's that big sell-off, and the token prices never rebounded from that. That was a couple months ago. So add insult to injury, they had a massive sell-off, and the token just cratered. And now it's
like a penny now, right? Yeah, a little above a penny.
2.5 cents, maybe 2.4 or something, I think. Or maybe it's less.
Yeah, no, Demo USDC on Coinbase is 1,253. So yeah, just a little over 1.2 pennies.
Let's see.
I didn't earn very much. My Demo connection was bizarre. Like, first of all, it didn't even work in my car. So then I plugged it into my mom's car. And then it stopped earning rewards, but I could track where my mom was. So that was basically the only net benefit I got.
Where'd you go today?
Like, where are you at?
Where you at? Yeah, that's one thing where I think, Brad, you're spot on. They just like fumbled the bag early on doing that, and then just add insult to injury. I mean, we always knew a subscription model was coming with Demo, but the fact that it came at the time that it did really just like, poured a lot of salt on the wound.
And so that's correct. They always said there's a subscription model coming, but
yeah,
you know, I asked them about it, and it was always like, we're probably going to find a way to work it into the tokenomics. There was a vote that was like, hey, will you take reduced rewards to cover the subscription cost? And like, it got voted down. And I think people didn't understand, like, if we vote this down, now we're going to have to pay in 6 months. The other thing that they did that was kind of dirty was like getting people to lock up their tokens and then introduce the subscription model. That was a horrible move.
That's fucked. That is fucked right there. 100%.
So there's a lot of things where I'm like, you know, the team super smart. I even met them out of their office in New York. Like, they know what they're doing, but at the same time, like, they just made. I think they made some bad decisions. Maybe they have reasons that I don't know for those decisions.
Yeah.
But for me, like, all right. I mean, the thing pumped up to 70 cents.
Yeah.
Back in
2023,
2024,
right? I think it was 2023, right? Was it 2024?
Mm-hmm.
Yeah,
it was spring of 2024.
Oh, it did pump in 2024. You're right. So it pumped up to like 83 cents in 2023, like
something big
right before Christmas, and then came down, but it still pumped up pretty hard in spring.
And let's see, High Mapper pumped January of that year. Like that spring was when that was like the one DePIN season we've really ever had in the last like few years was March of 2024.
Damn,
it was very short.
GG's,
very short.
So sad. That's why we're sad.
Again. Salute, GG's.
Demo should have moved to Solana. You know, I think nowadays, if you're a DePIN project that's building and you're looking at different chains to launch on, I don't know why you would pick something other than Solana at this point. And I'm also like, I used to fucking hate Solana. I've been on record saying this a bunch of times. I'm kind of glad that they moved to Base though for a little while, because there was this conversation of the chain wars and who's going to capture value and who's going to not. And I think that for you to see where L1s prioritize different verticals, that stems from, people starting to move there. And so Demo at the time was one of the bigger, kind of more legitimized DePIN projects. And so I think it was helpful because they were kind of in some sense the guinea pig. And I've had the base team on for the podcast, and we had a really good conversation, and they made it. They talked about DePIN being a priority, but Solana's very clearly made that a top 5 priority, maybe not number 1, but you've got, Raj talking about it. You've got Tolly talking about it.
Yep.
And so I think it was good that you had a couple bigger players go there and see what's going to be this bifurcation. Is it going to be, a few and then that's it? Is everybody just moving from Polygon and then they, then that dies on? And so it was a good test run, because I think now we've got, I know Alki's on base. I know I always constantly reminded, thank you, Quez, you are right. But I think for newer DePIN projects, it's hard to, when you've got the founders of the chain talking about your category and speaking about it at their big event and tweeting about it and all that kind of stuff, like maybe it's just vanity metrics and it's optics, but at the end of the day, they seem to have a greater level of value in that sector for Solana than other networks do.
I agree. I asked them why they chose base, and I think part of it is they're trying to get integrated in with like the vehicle manufacturers, and their thought was the institutional inroads would a lot of them would be on Ethereum and base, and that's where they thought it would be an easier route for them to get integrated with some of the manufacturers than Solana. That was the reasoning at the time. I don't know how much truth there is to that, but I just wanted to point this out. So March was 2024 is when we had that DePIN season for a very short period. We hit over 90 on the Fear and Greed Index on March 5th. So literally 3 weeks later, we topped again at the Trump pump. We hit a 90 on right around Thanksgiving, and literally 3 weeks later, we topped out. So anytime you hit 90 here, this has been the indicator, at least this market cycle in the last 4 years, that we top out 3 weeks after 90. The other thing, though, is we're in this extreme fear. The last time we saw this and then bounced back in a big way was, I guess, in 2021. We were down here for a little bit, I guess, a 2 to 3 month period. We bounced back quick. I mean, we went from, so it only took in this case, where are we at here? July, August, and then so like 2 months we were back up into extreme greed. In that case, 2 to 3 months. So some hopium there. If we do bounce back, things can move quickly, guys. Like we could by February, March, see a major bounce back into greed potentially if we see that repeat itself.
Yeah. By the way, our friend Quez, who's normally another co-host on the show, is loving to argue with me tonight. We said big business built on AWS don't depend on Jeff Bezos vocalizing business in order to successfully break out. I actually think that's wrong for 2 reasons. The first reason is that I've seen an AWS commercial at the last 3 Super Bowls promoting all the companies that are building on them. Mm-hmm. And then the other thing is like, and I've done a lot of startup stuff. And so, in the early days, there was like great AWS programs. And then more recently, like GCP has had really great startup programs. And so all of the credits that they give you and kind of the incentives they want to bring are real factors for what are otherwise quasi commodity solutions. Of course, there's the infrastructure that comes around, like the tooling over and above just the actual raw compute. So I don't think that is a true statement on the AWS thing. And number 2, I think you go where you get support. And if you're going to get support both vocally and just in terms of resources, that's where startups are going to go, at least with respect to DePIN and Solana. And so if they're like, hey, we want to help make these projects successful, it's no different than AWS's startup program or GCP's startup program, where they give you, people inside the company, obviously credits, all these other things. So I think like in this perfect world, yes, maybe it wouldn't matter. And by the way, if I was just taking them both at face value and I wasn't looking at where the support's coming from, I personally would probably choose base, because I think the value with, kind of the direct Coinbase in, and also just EVM compatibility does create additional flexibility in the future. Mm-hmm. But I don't think that is the reality, unfortunately. So
I agree with Tyler on that one. Quez, sorry, I'm in his corner. He says, I'm just saying that tons of businesses make money and are successful without Jeff Bezos ever tweeting about them. That's true, but like Amazon and AWS are already so much bigger than Bezos. Like, I don't know. Bezos doesn't Bezos not have a executive position anymore with them, right? Isn't someone else CEO?
He's on the board.
He's on the board. He's on the board. Yeah.
I mean, yes, that's true. And maybe it's not necessarily tweeting about them, but it's more about kind of signaling like being welcome or receptiveness. Like, you know, every VC fund that I've raised money from and work with, they all have startup credit programs that they come directly from AWS or GCP. It's like they're doing maybe indirect biz dev to get these companies to build on them, because once those credits run out, it's not like they're going to move everything over to a different cloud provider. So maybe it's not tweeting, but it's still the same kind of value relationship exchange, which is you're early, we're here to support you, we're going to give you the resources to enable you to be successful. And then the long-term benefit of that is it creates this lifelong customer that they can make a shit ton of money on. So I think it's maybe the value distribution mechanism is a little bit different. It's not tweeting, or it's credits, but at the same time, there's they're both deriving value in different ways.
Yeah, I see what you're doing there, Quez. I know what you're doing. I do think it's different. There's some parallels, but it's much different. With, again, Bezos not nearly having like a more direct correlation to AWS as compared to AWS as compared to Raj and Toli with Solana. I think there's definitely a much different versions of that going on, but still some parallels you can draw. I wanted to go to King Made Lawn Care, which I love the name, by the way. I'm hoping you actually do lawn business, because I need some help in my yard pretty soon. But he says, does peak exist in 3 years? It's a really good question. What do you guys think? I have my own opinions I want to share, but I want to hear what you guys think.
I feel like the best thing about Peak is their marketing team.
Okay, fair. Everyone else want to give their two senses here?
I agree with the marketing. I've never been big on Peak, and a lot of people have told me they don't appreciate my opinion on that.
I appreciate you, Brad. I appreciate your opinion. Right.
Here's the deal. Like, I get it. Like, I've talked to projects that are like, hey, Peak was super helpful in getting us off the ground, getting us going. Like, I've heard good feedback. I just have a hard time wrapping my head around what benefit there is going through them versus like a Solana. And I think there's a lot of projects that are, they're on Peak, but they're also making sure to be on other chains. And it's like, so I'm not saying that like it's not worthwhile for a DePIN project to be on Peak. I just don't see, and maybe I just don't understand the value proposition enough. I know they want to be the machine economy and all this stuff, but it's like the marketing's great. I'm just curious, like what's exactly built behind the scenes?
Really good question. Very good question.
Let's see.
Good points made too, and I have to agree with all of those. Tyler, I would love to hear your thoughts, and then I want to share my opinions as well.
It's basically the same as Brad.
Yeah, good. That's good. I have been of the mind that there's a lot of great projects on Peak that Peak has helped build up. Silencia, namely being one of them. But there's this idea of like, do we need another L1, right? Like there's that there obviously in the ether where like a lot of the value has kind of accrued to these major L1s like Solana, Ethereum. I was going to joke and say Cardano, but that'd be too much of a joke. But you know what, you get what I'm saying. Anyways, there's that point obviously exists. So I see a lot of liquidity going to those chains like Base, of course, as well, being a primary L2 for Ethereum there. But also their execution, and I've said this before, and I've said this on Spaces, I've said this in Discords, execution has been very lackluster. It's left a lot of people wanting. They've released products that just have not worked, unfortunately, and I'm just being very blunt there. I love the team that works at Peak. I love the team that has built up Peak before, and I love talking to them. I love learning from them what I can, but there has been a lot of grief, rightfully so, in the community where they're like, hey, why are we going through this season 2 campaign, season 3 campaign? Why are we doing this when none of the products work? Nothing connects. Nothing actually works in the beta app, or the majority of it doesn't actually work or fulfill any kind of need. And so there is a lot of problems there. Like their marketing team is spot on, and they've clearly incubated an amazing community, an amazing environment to build a lot of DePINs on there. But it's left a lot of wanting from a lot of people.
Well, I think the other challenge too, right, is that like they've built what was a Polkadot substrate with basically this kind of nominal amount of additional value, which is like on-chain IDs, right? Which is it's a non-trivial thing to build. It's like maybe a few $100,000 of development work. And so
yeah, I was going to mention
that kind of a model, like 5 years ago, I thought, oh, this is going to be kind of the L1 of L1s, even Avalanche has kind of a similar value proposition. Like I can see that, but trying to build a new chain that's fundamentally just a derivation of something that exists with very dubious amounts of value adds. Now you're just playing a marketing value capture game, which is super, super difficult. And so I agree. I appreciated the fact that they had kind of an interesting vision, but like back in, and I always sound like a fucking boomer when I say this, but back in 2017, when every L1 was trying to dethrone Ethereum, it was the same playbook. You like launch a token. They all went to $1 billion in market cap. They gave a fuck ton of money out to these companies to try to incentivize them to build. And then none of them really sustained or existed. And so there's so much additional risk that's outside of, just the execution side or anything else that it makes it really fucking difficult to compete. And so without having enough of a value moat to be able to continue getting people to want to engage and participate within your ecosystem, it's like you just don't have a shot. And by the way, I think the other thing that's really telling about this is that the companies that are still on peak are like, they're there for sort of marketing representation, but they don't have much of anything that's actually deployed outside of maybe on-chain IDs, which by the way is like a very trivial thing to develop. So I wouldn't even consider that like an actual value exchange relationship. Most of them are launching tokens on other networks, as you alluded to, Solana Base.
Yeah, they've got multi-chain. Silencio just went on Base too. So
right, because that's where liquidity is. So it's like, it's just a hard thing to solve. And Look, I think it could be this interesting world where, you've got all these different projects that are kind of building in one ecosystem, but the reality is market fundamentals are also super important for these things to be able to start bootstrapping and get supply and people trading the token, so on and so forth. And it's nearly impossible to do all of those things in parallel while you're trying to build value around a chain with less than, in my opinion, key differentiating value prop that keeps those companies wanting to build.
100% agree, Tyler. I also wanted to shout out our sponsors for this episode. Peak is actually a sponsor. No, I'm just joking, of course. I'm just joking. No, but I think it's good. I think it's good to be honest about our opinions. I think it's good to be, kind of be critical where we need to be. And I agree with everything that just Tyler said, Brad said, Brian said. Quez, I know your thoughts on this as well. I know you just put like 1 million. Is that a billion? What is that? What do you put? 10 billion? % agree?
Billions and billions of percent.
Billions and billions of percent of agreements. There's so much agreeing percentages coming up through the southern border. My goodness. Yeah.
Well,
I felt that sigh there, Brad.
Yeah, I was just looking at the time. I was like, damn, we've been on for
2 hours.
It's been a good conversation, guys. It's been a really good conversation. We can wrap it up here. Like a King made long hair, LOL.
Yeah, I gotta get some shut eye. Get
shut eye, dude. We're in crypto. We don't sleep. What are you talking about, Brad?
I haven't been. I'm trying to sleep tonight.
No. You can't go to sleep. That's when everything bumps. When you pass out,
that's
you wake
great.
up, you're like,
I'll wake up and be like, whoa, I forgot what the green looked like from a year ago.
What if it pumped and then dumped like while you were sleeping, so you woke up and everything was just red? It was like just worse.
You mean like what Bitcoin does every single day now?
Yeah,
like that. Yeah.
You should put some just like longs in, and then make sure you put some stops in at the top there. That's funny. That is funny. But no, guys, it's been a great conversation. Any kind of final thoughts here before we kick things off?
Have a happy holiday. Are we going to do a stream on Wednesday before?
No, I have so many plans.
It's Christmas Eve. Yeah,
Christmas Eve.
Let's not bring our sadness into Christmas. How about that? Let's just avoid the charts if we can.
Yeah, we're kind of screwed because it's like New Year's Day. Well, New Year's Day might work, but we might all just be blasted and tired. But
blasted, we're just drunk, Christmas drunk. Like, oh, Merry Christmas, DePIN.
It'll be like 8 o'clock. We'll all be like, oh, it's time to go to bed.
I think it's safe to say we're going to skip next week the DePIN Happy Hour, DePIN Sad Hour. At this point, it is Christmas, so happy holidays to everyone. Brian, you got any final thoughts?
Merry Christmas. We say Merry Christmas, not Happy Holidays. So
I say both, just in case. You never know.
No.
Maybe a Friday show.
I'm down. I'm down for a Friday show. We can do a Friday show. I'm down with that. Brad?
Tell the wife declares date night. Yeah.
Oh, man. Happy holidays. And, oh, man. Stay patient, guys. Seriously, I mean, that's the only thing you do. Like, I remember back to the FTX days, and for anyone that was here during those times, like, those were like such difficult times. We had about a year after that to like buy, but when things took off, it happened really quickly. Like we started seeing things kind of turn around in fall of 2023 a little bit, and then it was like a rocket ship in a matter of months. So just remember, things can turn around quickly. It doesn't mean it's going to happen in like a month or two, but I do strongly feel that these projects right now are undervalued from where they're going to be when things do turn around. So I'm locking in, man. Like as hard as it is some days where, like we saw today, but I do remember feeling this way in the past and how quickly that can change. So
100%, Brad. Thank you so much, dude. Yeah, guys, lock in. Happy holidays. Merry Christmas. Don't forget to tax loss harvest as well, guys. Don't forget to do that. Write off all your losses against your taxes there before the 31st. I know I will be doing that. Not tax advice, not financial advice, but thank you so much for tuning in to another DePIN Happy Hour. We'll be back again possibly next Friday, but if not, we'll be back in the new year, fresh 2026. Hopefully a bright year for DePIN. So we want to say thank you so much for watching. Thank you so much for tuning in. We'll catch you guys on the next one. Thank you.